Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to explain our 3 different theoretical values and then show you how we use them in the trade ideas. Matt, do you want to share your screen and get us started?
Sure. Yeah. We have Auto is our AI that people ask questions to. Auto is awesome. If you haven't used it yet, please go over there. We even have one on our website. But there's also an Auto in our dashboard that's tied into our data. So you could really get a lot of neat answers from that. And Otto suggested that we talk about, or what people are asking mostly about are theoretical values. And that kind of throws people. But you could think about theoretical values as a Kelley Blue Book. If you're buying a car, used car, what's the value of the used car according to Kelley Blue Book? And then you go look at the car and you make an assessment. So hopefully that helps. From a high level, anything else, Tyler?
Yeah, it's just our way of, if we have these theoretical edges, right? We display them in percentage terms. I think that's kind of another way to define it, right? We have our theoretical price, and then the percent edge that you see on the screen in most of the tabs is the difference between our theoretical price and the market price. And so usually a positive number is a good thing there.
Yeah. That's another question that we get, positive for selling. Yeah. We put it in terms of the trade. So you want positive edge that's a good point, Tyler. Thanks. So we have these edge, show up, but they show up all over, but mostly in our scanning. If you go to our trade ideas tab, and now the dashboard opens at our trade ideas, you'll notice a table of a lot of different trades. The way that we find these trades is varied. We have 4 different ways using the backtest finder. That's the one that has 390 million trades in it, and we try to find the best ones from each popular ETF. And then we have curated strategies, or ones that we've gone through at ORATS and picked out and done some optimization on. And then the strategies that you have saved that go into the My Strategies. And then option scans themselves. So these are a lot of my option scans that I have out there. So these are all ways to find trade ideas. But we're going to start with what comes up first in the ORATS dashboard, and that's the backtest finder. So you'll notice that there's an SMH iron butterfly. It shows what the legs are. It shows where the stock is, the expiration or expirations, and what the price of the trade is, the probability of profit, the risk reward. So these are all very related. You want those to relate. So you often compare, like I'll often just sort these and try to get, the best risk reward setup with the probability of profit is sometimes a good way to use that. But we're talking today about these 3 items. The D percentage is F percentage and S percentage are all how we characterize our theoretical values. The first one that we came up with was really the forecast was the first one that we came up with, Tyler, strangely enough. And then, because that's what when we were on the floor, we do forecast of volatility. And then we would just compare that with the mid-market. But then we noticed that the mid-market was off. So then we came up with a smoothing, which basically you draw a curve through all the strikes, and you get a smooth theoretical value going through all the strikes. And I'll show an example of that. The forecast is based on a few points. So first of all, we try to forecast the next 20 days of volatility. So we use our historical volatility in order to do that. So you can probably think that the forecast is going to be pretty far off of, or could be far off of the market, whereas the smoothing is going to be right near the market. And the distribution makes a distribution of returns, and then you calculate an expected return calculation. So you just multiply all of the distribution points times what the payoff picture is going to be, and calculate a theoretical value there. Is that all right so far, Tyler?
Yeah, that's great. I want to add a few things to that. So on the distribution percentage, you can see the nodes that Matt's talking about, those 21 different buckets and nodes in the payoff diagram in the trade sidebar. So that's kind of what we're talking about when we talk about the distribution percentage. And you can kind of back into a probability of profit calculation from those by just, looking at the area under the curve multiplied by the percentage of the node. One quick thing to note on the distribution percent is that it doesn't include earnings. So if you have a stock that has earnings coming up, it's not kind of factoring in like historical earnings moves. On the contrary, the F%, the forecast edge, does take into account upcoming earnings with the implied earnings effect. So there's a few variables that go into the forecast edge, in addition to obviously the forecast of volatility that you talked about, Matt. We have a forecast of slope and a forecast of derivative, if I'm saying that right, or is it derivative? The what's that thing, or the one that's similar to slope?
Yeah. So that's a good point. So the way that we come up with our forecast, and I started to get after it. So we try to make a forecast of the next 20 days of volatility, and then we use a long-term prediction of implied volatility. So that gives us a term structure, but then you need any earnings effect. So for ETFs, there's no earnings effect, but for a stock, we do have an implied earnings effect. So that will kick up the term structure. And then, the curvature of the slope, and then the how much the slope has a smile to it is the derivative. So with those parameters is how we make a forecast of volatility. And you should also know that we measure all of those slope points, derivative points historically. And, we could look at that, especially that's a good way to look at that is in the outlook. So,
kind of a way to think about the forecast edge then is to just sort of say, ORATS is doing a lot of algorithm work on the back end to sort of forecast a volatility that combines slope, derivative, and implied earnings move. ORATS is comparing those historically and to other patterns that it sees to sort of come up with its own volatility surface. And then using that volatility surface, we back out into a theoretical price for this trade.
Yeah, let's do an example because it's getting a little theoretical. So I think a good example is to look at the worst theoretical edge. Like, why is this one so against our forecast? Okay, you want to do it that way, Tyler?
Yeah, it sounds interesting.
All right, cool. So this is a long calendar. So we're buying a farther out. We're buying, it's only a 10-day calendar, and we're selling in October. So that's like a week. Yeah, it's like a week in 10 days plus a week. So we have this value. It's around $1.44 is the value in the market right now. Our smooth value is the same as what the market is. So that's how that smooth value smooth edge. It's very small, less than 1%. But you can see that the forecast edge, it's moving around, but it's negative 60% approximately at 60 cents. So it's like half of this value. So if you want to look at the components of that, you could go to the options chain, and we'll try to kind of figure out. And the cool thing about the option chain is that it goes directly to your the options, and it actually shows where it is on the skew. So there's one, and then where's the other one? It's 8 days plus, and there's the buying. You can barely see that green, and you can see that selling. So it's way out on the skew, and so you could. So here's the one that we're selling in October, the 8 days out. So the volatility in the market is 12.2, but our forecasted volatility is 9.8, Tyler. So it's quite a bit off. So we're selling. This is what you want to do. You want to sell, something for 14 cents that's worth 2 cents. So you can see that there's 12 cents of edge there. So you're like, okay, well, the other one must be the big one. Right? So let's go to the other leg. I'm just scrolling down, and it already has it open here. So I'm scrolling down to the out of the money calls. And then so you can see these out of the money calls are worth in the market $1.57. Our smooth is right around there, $1.59. But then if you look at our forecast, it's actually 10, but in the market it's 14. So the theoretical value or the forecast value is only 61 cents for these, or now it's 65 cents for these calls. And so that's where the negative edge. We're saying, okay, in our back test, it buys this call and sells the other one. Well, this one is only worth 65 cents. So you might say, well, that, and you can see it jumping around, which is good. Well, that looks like a trade that is that does not have very good edge, and so that's a way to look at the forecast value. But I think another way to look at the forecast value is to click on the trade builder and see why we're coming up with such a low forecast of volatility. And the reason you see that is like volatility, the historical volatility has been like incredibly low compared to that's the magenta line. The blue line or the cyan line is the call, or sorry, I shouldn't say it that way. The implied volatility of the 30-day has been way above the historical volatility. And as I said before, our forecast is based on historical volatility. So that's the reason our forecast is so much lower. And that's why, this particular trade idea that I sorted and, purposely trying to find the worst one is so bad, is that you're buying this kind of bad or theoretically bad options. That makes sense, Tyler?
It does. I think the forecast edge is probably the most difficult one to understand out of all of them, because there's so many different moving components of that calculation. But yeah, I think it's important to sort of, look at all these collectively. And like, I think people have a tendency to sort of say, oh, we have a really big forecast edge. Let's get into it. Like, that's a great trade idea. But it's not really just, I wouldn't say, definitely don't take it with a grain of salt. Like, take it, it's a good calculation, but you shouldn't be using it as the driving factor behind.
Yeah, that's a good point. So how do you use that, right? Yeah. This isn't guaranteeing. This isn't guaranteeing. Probably like what it's doing is it's showing exactly what I just pointed out, is that especially for shorter term options like this, the historical volatility has been quite low. It has kicked up in recent days, but that's why the forecast edge is going that way. And your job as a trader is to say, well, is that true, or why is that? Like, so often what people will do is if they, there's a lot of, macro risk out there in the market right now, but, and there's a possibility of a big move in the stock. and any tweet or whatever. So you're kind of trading against that. You're closing your eyes to all the macro really, and you're just saying, well, the actual movement in the stock recently has been quite low. So that's where you would either agree or not agree with the forecast percentage, Tyler.
Yeah, the way I like to see it is, it's really hard to find alpha in the market, and what ORATS helps you do is find alpha at every step of the way in the trading journey, right? So this is the option scanning portion of the trading journey. There's thousands of, if you've identified a strategy and a symbol that you like to trade, and even let's just say you've gone past that and identified the best entry and exit times, the signals to enter, right? Even at that point, there's still hundreds of trades to choose from. And so how do you choose from those trades, right? Like there's a lot of different combinations of calendars that you can trade, different strikes, different widths, and different expirations. And the way that we like to pick them is with our option scanner that has these theoretical values as part of the weighing process when you're ranking the trades. So it's just one part of the journey of trading, and we like to just give you a little bit of alpha at every step. It's not going to solve all your problems, but it is one helpful thing.
Yeah, and what you want to do is look at the back test, look at the theoretical values, and see if you agree with those. So the one that has the most edge right now is gold. So you could look at the iron condor, how it's done, and the rules for it. And is this a good time? From a forecast standpoint, it does look like it. Now, from a distribution standpoint, it doesn't look like it. So let's kind of square that circle a little bit. So interestingly, in the distribution for GLD, it's slightly gold in a lot of ways is very different from stock movement. Most of the movement in gold, they're saying that the distribution bucket for this particular 95 days is kind of negative, but then there's a longer tail to the upside, which is how you kind of square the stock being up over time. But so this distribution looks different, and frankly, the slope and all that is different in gold, because it actually gets more volatile as it goes up. When there's more macro events, gold will tend to go up and be more volatile. So here's a distribution there. Our forecast is still, again, you could go to the trade builder and take a look at gold's historical volatility. It still looks a little low, especially compared to the implied, which is why there's edge there. Actually, this is an iron condor. So the iron condor is basically selling the meat and buying the wings. So this difference right here is the iron condor difference. Like, you're selling that, and so that's why there is positive edge in this particular trade. Positive forecast edge, not necessarily positive distribution edge, which is interesting. I like to have everything agree. When I find a trade, I want everything to agree. I want to have so I usually sort it by forecast. So here's one. This XLK has a distribution edge that is going the same way as the forecast edge. Even has a little smooth edge to it. So I'd be interested in that. What I'm not crazy about is the small margin return. So I might actually look on, and then maybe look down here to IWM and see a larger return, a larger margin return. Not too much. So this is something that I'd be interested in. Then I would look at the graph, look at the rules. It's got a quick trigger. And so this might be one that we'd be interested in, Tyler, the IWM iron condor. Again, there's a little bit of SMV edge to it, which means our smoothing. Let's take a look at that smoothing, the edge, and you might be able to see it in the graph. So let's go up to and focus in on. So you could see the orange line is our smoothing line, and we want to be selling above and buying below, which is kind of what we're doing here. So that's where that smooth edge is coming in, Tyler, and that's how the S value is calculated. You could see, it's right along the line, but some are above, some are below, and this is identified one that has a little bit of edge there, and then we could look at the individual strikes. So we're buying one. This is that one where the SMV, we're paying the SMV, which is great, and we're selling. Let's see, this midpoint is like a little bit above, so that's good. So that's how the S percentage happens, and then the forecast. Again, our forecast, it isn't as much as in SPY, but our forecast is lower than our what's in the market. And so that's why there's forecast edge. Does that make sense so far, Tyler?
Yep.
Yeah. So, I mean, this might seem like a lot of calculations to go through, but this is, this is where you do gain a bit of edge. First of all, we want to put as many things on as a trader on your side as possible. You want to find a good back test that you agree that will work going forward. You want to find a good trade setup that has a theoretical edge, and then you have to get a good execution, and then exit at a proper time. And those are the pillars that we always talk about. The research pillar, the execution pillar, the risk management pillar, and the review. Those are all things that you need to be doing in order to be a successful trader. And the theoretical values, are one of the things that you want to make sure is in your favor when you're trading, Tyler.
Yeah, it's really cool. I love all the different ways there's alpha in the dashboard, including these theoretical values. And I think we make them really easy to see in the dashboard too. They're in the trade sidebar. They're in the option scanner. They're in the trade ideas. So it's nice to see them all everywhere.
Yeah, and so we found a trade that has good edge. It has edge. So now we put it in our paper trading, and now we could put notes. Like we could put, first of all, we want to get a trade alert when our loss is below 25%. And then this is a T-hub, so this is where we did it. And then theoretical values that we put on. So I'll get a text and I'll go, what was that? This is the trade that we put on in the Trader Hub. And, now we have an alert over here that shows up. And then, it goes in with my other alerts, and, I can monitor that, these alerts. So, then, check out other things, but we also continue to monitor the theoretical prices and the theoretical edges as this thing goes on, which is kind of cool as well.
Yeah, that is really neat. I'm really excited for when, and this is coming later this year. I'm excited for multiple paper trading accounts, because we have all these trades that we make on Tradier Hub, right? It'd be nice to have, kind of different sectioned off paper trading accounts. So, we're working towards that.
Yeah, this is kind of an interesting graphic, Tyler. So, you could see that where we sold. Where we sold, that's where we got the edge. right? And then, from a percentage basis, it doesn't look that good. But if you add them all up, it's you can see that we have edge there. So you could monitor this edge as it goes forward, Tyler.
That's really cool.
Yeah. And it might be, we don't have this, but it might be an interesting exit. Or do we? I don't know. Do we have an exit alert when we lose edge? I wonder.
I don't think so, but that would be an interesting thing to do.
Yeah. So
edge is one of those things that we don't really have built into the back tester quite yet.
Yeah.
But it would be interesting to do it.
We could add a theoretical alert, like when it goes, too flat or whatever. That's time to get out.
Yeah, I like it.
Yeah. All right. So that's all I got on it. I think just to summarize, ORATS has these theoretical values, basically 3 of them, in order that we're showing them here. The distribution edge is, we go back historically and put each stock change into a distribution. So it's like, that's how normal distributions are created. But these aren't normal. These are based on actual. And then we overlay the payoff for that particular DTE. And that creates a distribution edge. And you could ask more about these on auto. Like, this is where we came up with it. Like it as D percentage, right? And then auto will go off and shoot you a huge diatribe on D percentages. So it's very good to see that. It takes a few seconds, but it talks about distribution, how it's calculated, how you might compare it, how you might use it, what a positive means, what a negative means, an example of using it, and compares the other indicators here. So I encourage our people kicking the tires to use it at orats.com. The people that are using the dashboard, use Otto. I mean, he's still cranking out information on that.
I'm amazed at how much it is.
Yeah. So, so we talked about forecast edge, and that's when we look at actual volatility. So, lately the actual volatility has been below the implied. So there's a lot more selling trades that are showing up with positive F edge. But again, you have to take that with a grain of salt. And then the S edge is what we looked at before as well, where we draw a smooth line through all the strikes, and you want to be selling above and buying below, and that's what all of the forecast smooth and distribution edges mean. And again, if you want more information, just go to Auto. Our AI will give you a bunch of information on it, Tyler.
All right, thanks, Matt. Yeah, that was a great explanation. We did get a comment earlier. What are the odds that someone can execute a live trade at the same terms that ORATS is showing? So yeah, what I would say to that is, I mean, you can follow along in the dashboard. We're using the same platform that's available to you. As long as you have your live data agreement signed, then you should be able to follow along and send things at pretty close to the same prices that we do. So
yeah, I mean, there is some slippage, but I'm trading a lot of accounts that are using that, and you get filled at decent prices.
Yeah. And you can connect your Tradier brokerage account. So.
Yep.
All right. Thanks, Matt. Thanks, Tradier, for hosting us again. If you guys have any questions, definitely try Auto first. It's much faster than we are at replying to support. Or you can also leave a comment in the YouTube video. We also have a community tab on the dashboard that you can engage with other ORATS users in. But yeah, thank you for joining the show. We'll be back again next week. See you then.
Thanks, Ty.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.